taxpayers, prepare, get ready, because the end of the Trump era GOP tax breaks will hit soon. And when they expire, we should all expect to pay more. Unless you know this one simple trick to lower your taxable income. Plus, more on the massive shot to insurance, premiums, policies, renewals, cancellations, non-renewals, homeowners insurance, renters insurance, car insurance, life insurance. They're all taking a huge hit. 99% of all these people will be affected in some way, and all of these people will lose money, potentially lots and lots of money that they honestly just don't have right now to lose. Welcome back, everyone, and please make sure you smash that like button, subscribe to the channel, and do not forget to check out and to click the links in the description so that you can sign up for the free newsletter. Very important, and again, 100% free. New and important updates are coming fast, so make sure that you keep an eye out for emails from me, Kevin. That's Kevin in all caps, youtube.com/@Kevin247, because I will be sending you emails with tons of valuable and important and time-sensitive information that you're not going to get anywhere else. In addition to helpful links in the description to gain access to online money-making opportunities, ways to prepare to protect your wealth, buy and hold hard assets, protect your wealth with gold, as well as becoming official channel members and gaining access to perks only available to members, plus special designation attached to your username so that everyone can see just how long you've been a member of the channel. I hope you're all doing well and will enjoy what I have put together for us coming up next. And I urge you to pay very close attention to what I have to share with you, because Trump era tax cuts are set to expire. And here's how much more that you'll be paying, because when 2025 draws to a close, so will many of the sweeping Trump era GOP tax breaks established by the Tax Cuts and Jobs Act, TCJA, of 2017. And the legislation that made tax cuts to lower individual tax rates will expire soon, and there is little chance that the current administration does anything to stop it. Therefore, we will see no extension of these tax cuts, and what we will see are massive cuts and a huge decrease in our take-home pay after taxes. And this is really going to affect those who are living paycheck to paycheck. This will be largely dependent on which party ends up controlling the White House and Congress after Inauguration Day. And so for now, it would be wise to get ready and to prepare for the changes to the tax code that are coming. Whether cuts can be kept by Republicans, rates rewritten by Democrats, or a divided government will agree on some sort of bipartisan compromise, taxpayers of every political persuasion, according to experts, will be affected. So, Julio Gonzalez, CEO and founder of Engineered Tax Services Incorporated, warns of a harsh reality facing Congress and said, "We are in a situation in which many American families and businesses are hanging on by a thread. Letting the non-permanent provisions of the TCJA expire could be catastrophic to our overall economy and the well-being of many working families. Those potentially impacted the most are 90% of Americans who select to opt in for the standard deduction, as well as American taxpayers with considerable estates who currently benefit from larger exemptions. And because this tax can have a significant effect on your beneficiaries, it's best to plan ahead for it in your estate plan if you think your estate may trigger it." Again, please make sure you sign up for the free newsletter, link in the description down below. Tons of valuable information will be shared to you all regularly as it affects and will have impacts to your finances, personal, business, and household balance sheets, money, income, debt, budgets, savings, investments, and retirement. Don't miss out on this extremely urgent and, most importantly, free info. And I want to thank you all for spending the time out of your busy day to be here with me on this video right now. Okay, now let's talk about insurance, or better yet, insurance, because experts say that homeowners face sharp rises in insurance rates due to a variety of factors. And if you can believe it, inflation is one of those factors. So, according to insurance and real estate experts, homeowners insurance rates have been steadily increasing over the last year. And those experts say several roles play a factor in those price increases, including the drought in Central and South Texas, hurricanes, tornadoes, and flooding in Florida, and wildfire in California and throughout the Midwest states. Real estate agents are chiming in on this growing problem too, with one Clark Realty professional saying homeowners insurance in Texas has actually gone up about 20 to 30% in the last year. And for the first time in his career when selling a home, he must ask buyers if they will be able to afford the insurance on that house. And this could be the difference in getting a clear to close from underwriting or not, and seeing the whole deal fall through. And people who already own a home may be noticing that very same difference even more, with reports of some who are seeing increases of $200 to $500. Some people's policies have doubled this year, unfortunately, and extreme climate change and dangerous and threatening weather conditions also play a role, including the drought in Central and South Texas. So basically, what they're saying is that severe weather does attribute to the rise in home insurance costs, and that you have to look back from 2021 when we had the ice storm and droughts, fire. All those are more prevalent now. So it does cause everything to go up in price. And on top of all that, inflation only adds to the increase in those rates. Insurance providers like State Farm, Farmers, Allstate are hedging their bets because they know that with the increase of cost and goods, when there's a claim that's filed and when they have to go and fix that claim, let's just say they have to rebuild your entire home or even replace flooring because of a loss, that cost has increased significantly. Some insurance agents and brokers that I have heard from say the best thing that you can do as a homeowner is to shop around for multiple insurance providers because they all take into account different factors. Some prefer certain roof coverages. Others look at your credit score. They all look at something a little bit different, so it's really just finding the carrier that you fit perfectly with. But get ready to pay for it. Now, the insurance companies, they want to tell us the rates are expected to decrease, but the soonest that could happen would not be for at least another year at the earliest. And I'm honestly not holding my breath on any prices coming down anytime soon, especially when they know where they stand and how much power and control they have over financed homes with banks holding their mortgage. It is a contractual obligation to have insurance on your home if you owe the bank money through a mortgage, a second mortgage, a HELOC, or home equity loan. Without insurance, or a lapse in coverage could trigger the banks to foreclose on the lien that they have on your property deed, and this will then lead to a nationwide homelessness problem and then potential flood of inventory on the markets in terms of foreclosures. Expect venture capitalists, institutional investors, and smart money to come in, just like BlackRock, to buy up all the available homes and then turn around and list them for rent at much higher monthly lease prices. One insurance provider said, once the economy kind of stabilizes and once the market stabilizes, then we'll have that overall trickle effect down to the insurance market as well. And that is potentially true, but it's hinged on an extremely volatile and unlikely outcome, and that is that the economy stabilizing and the markets are stabilizing too. Now, I'm going to be real with you. We are a ways away from that happening, so I wouldn't hold my breath. Thank you all for watching and tuning in. Please head down to the description and click the link to sign up for the free newsletter. Join us and become a channel member too. There are exclusive perks for channel members, and I really hope that you enjoyed this little chat. And please smash that like button if you'd like to see more of these happening on this channel. If you haven't subscribed, please do, and make sure you drop a comment down below and share the video with friends and family. I really want to know what you guys think about all of this, and we can continue to build and grow on these conversations in the future. Now, I got to go and get some other videos completed and uploaded to my other channels, as well as connect with clients that I'm coaching and mentoring to build their channels and grow their side hustles into passive income streams. I look forward to seeing you all real soon. I hope you all have a great day.